Welcome to Drill Down Earnings. We have quarterly results out from Micron. This is a really interesting quarter from one of the 50 most important companies in all of technology, says me, Cory Johnson, Chief Market Strategist with Epistrophy Capital Research. Micron earnings Q3 numbers, so much better than expectations of $8.8 billion. These guys did $9.3 billion. Just a really fantastic quarter. $9.3 billion in revenues, $1.91 in GAAP earnings per share. Non-GAAP earnings per share, I should say, so much better than Wall Street expectations, again, of $1.61. But that's just Wall Street getting it wrong. We don't care about the miss or the beat. We care about the actual numbers. So we saw, as I said, $9.3 billion in revenues. That's up 37% on a year-over-year basis and substantially from last quarter. These third results just super strong, driven by the businesses that we know are doing so well. DRAM, of course, forever, specifically high bandwidth memory within that. These guys, wonderfully profitable, 23% operating margins. This is a cyclical business, and they're in Idaho where they make potatoes, not hay. But I was taught, make hay when the sun shines, and things are going well, and these guys are making a lot of money. 23% operating margins on $9.3 billion in revenues is really great. Now let's look at the revenue blend, what this business is. So I mentioned, of course, DRAM is the main business there, but who do they sell to? So they're selling to computer and networking, which is 54% of their business, the biggest part of their business, but important businesses in storage, in mobile, and embedded systems. And when we go through these different businesses, their biggest business, computer networking, was cranking, growing at a fast rate, 97% year-over-year growth in a business that's now doing over $5 billion. Just a fantastic result from this company. They were completely sold out in what they sell. We knew that going into the quarter, but these numbers were super strong. Their storage business also growing at 7%. Again, a big important business for them, nearly $1.5 billion in revenues there. Mobile declining, interestingly, down 2%, but not as bad as last quarter. So we'll see if there's maybe a recovery there. And embedded systems shrinking at down 5% here. How did the stock react? Well, the market loved these results. Stock was up 3%. It's had a nice run in the last few months here. I mean, the stock was at 60 back in April in the sad, scary days of the announcement of tariffs, only to see some of those tariffs roll back, but still under high tariffs, the stock has doubled since then. Although for the year, the stock is down 11%. So importantly, this company is spending a lot of money in capital expenditures and talking about that in the quarter and taking money in from the government. Now, the CapEx number looks like it's down because it's a negative 34% sequentially, and less money. Yes, less money being spent by Micron, but they're not including the money they're getting from the government with the result of CHIPS Act and other programs supporting them. So they're spending a lot of money, but they're spending somebody else's money. And as a result here, we see a lot of spending by Micron not showing up in that CapEx number. It looks like it's down. And I think it's important to put that number into context. One of the things I track is CapEx as it compares to revenues for the company. It's not the perfect number, but it's an interesting number. And what we see here is that as a percentage of sales, that number is now down to 29% of sales here, again, as a result of them being the beneficiaries of getting some money from the federal government in the CHIPS Act and really growing their business, investing in their future. Here's what Micron Technology's CEO, Sanjay Mehrotra, had to say on the earnings conference call.
Yes, our HBM is sold out for 2025. And as I mentioned earlier, we are working closely with our customers as their platforms, AI accelerated platforms, both with GPUs as well as with ASICs are continuing to evolve and move fast. And, they themselves are working on overall their supply chain requirements and product mix with respect to HBM 3E 12 high as well as HBM4. So we continue to work with the customers in those. And, we are still in the middle of 25 and for 2026. As I said earlier, we see, with respect to bit demand growth, strong trend in 2026, bit demand growth for HBM significantly exceeding DRAM demand growth, and of course we have a strong product roadmap.
So really bullish notes coming from Sanjay Mehrotra and the folks at Micron. But what does it all mean when you want to look at these numbers and remember the one number that tells us a whole lot, your essential summary of Q3 earnings for Micron? So Micron's Q3 was really, really strong. Your essential summary says sees 37% growth on a year-over-year basis and $9.3 billion in revenues and a lot of profits. But what's really driving this is high bandwidth memory, that is to say memory chips stacked on top of memory chips as they're being made. We've never seen anything like this in the world of DRAM before. These guys are seeing their data center business growing at over 100%. They're seeing over 50% year-over-year growth in this high bandwidth memory business, which is very profitable and very successful. And that brings us to the bite, the one number that tells us a whole lot. Their giant compute and networking business, driven by high bandwidth memory, rose 97% on a year-over-year basis. Fantastic results from Micron, really taking advantage of growth in the data center and indeed in AI. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.